Hi, business owners. Would you like to save 20% or more on your health insurance costs? It's one of the most significant expenses that companies have, and they keep increasing dramatically each year. Most Fortune 500 companies, if not all, might surprise you to learn, do not actually use traditional health insurance providers for their health insurance. And the reason is that they are much better able to control costs and save money by using their own captive insurance company. Now, for middle market businesses and small businesses, a captive insurance company just isn't feasible. It's too complicated. It requires too much administration, too much effort, and many companies may not even meet the technical requirements from a tax standpoint to have their own captive insurance company. However, there is an option to use a shared health insurance captive insurance company. Companies such as FedEx, Keller Williams, Amazon are all using them for their drivers, and in Keller Williams' case for their independent realtors. And Grant Cardone has also instructed 100 of his portfolio companies to move into the shared captive experience as well and move away from traditional health insurance. Again, the goal of this is to save 20% or more on your annual health insurance costs. And how do you do that? There's a couple things. First off, the administrative costs in this shared captive are much lower than the administrative and processing costs at traditional health insurance companies. Secondly, there's no middleman, there's no broker who's taking a commission to sell you insurance from an insurance company. So that cost is eliminated. And then thirdly, if you have overpaid your premiums in a year with a traditional insurance company, that becomes their profit. With the captive insurance company, the shared health insurance captive, if your claims come in less than was anticipated, you will actually get a rebate in the form of a premium refund from the health insurance captive. So those three areas can generate substantial benefits annually, 20 to 40%. In addition, they have excellent care options, which of course is one of the big concerns that you and your employees have, is the quality of the care. There are national contracts with the Mayo Clinic, the Cleveland Clinic Foundation, and many others. If you have a provider that you want to work with, I'm sure that the health insurance company can work with them to come up with a plan that would suit you. So at the end of the day, even though you're buying into a shared captive, whatever plan is developed is going to be developed with you specifically in mind. For example, which kinds of procedures do you want to cover or not cover? What are the important elements of insurance plan to you and your employees? Is your employee base older, or is it younger and not using much insurance or health care at all? So there are many things that have to be considered in developing a plan, and the health insurance captive will work with you every step of the way to get that in place. And finally, of course, as a middle market company, small business, if you're able to save money, save 20% or more on your annual health insurance costs, that increases your profitability. And anytime you increase your profitability, you increase the value of your company. Almost all business sales are done based on some multiple of earnings or cash flow or some combination thereof. So the more earnings and the more cash flow you have, the more valuable your company becomes. If you found this video helpful and you would like more tips and suggestions on how to improve the value of your business going forward, hit the subscribe button and have a great day.